It's like once you find the man of your dreams or the woman of your dreams, it's not easy, right? But once you find a person, you want to be with the person for the rest of your life.
Yeah. Wow, okay, no, nice analogy. So good day to all and welcome to my investment resume. So today we have a very special guest with us. So personally, I've heard of him way back since I was in primary school. So besides being in a financial education business, he has also been in other industries as well. So welcome Adam and thank you for joining us today. So
Thank you for your invitation.
yes, no problem.
Pleasure.
So can you first introduce yourself to our audience?
So I'm Adam Khoo, and I'm the chairman of the Adam Khoo Learning Technologies Group. So we're in the education business. At the same time, I'm a full-time investor. I've been investing since I was 17, so it's about 32 years. And I've been teaching investments since 2005 through the Wealth Academy investment classes and now the Piranha Profits online trading and investment school.
Okay, so that's been about 20 years already.
Yeah,
Wow,
that's
that's
right,
really long. Okay, so going back like to when you started, so maybe can you share us how you actually got started on investing?
So what got me interested was my grandfather, because when I was young, my grandfather used to give all the grandchildren ang pao every year, and he didn't just give cash, he would give us shares of the companies he owned. And in those days, it was physical share certificates, Malaysian companies. And he used to like lecture us for an hour every year and said, if I give you cash, you're only paid once. If I give you shares of a company, you're paid for the rest of your life. Because he said shares, when you own a share of a company, it's like you're owning a money-making machine. They'll pay you for the rest of your life. So I got very excited, like, wow, money-making machine can pay me forever, right?
Yeah.
So I got very excited about shares because of him, all right? And my grandfather was kind of like my role model, because he was not even a director or a business owner. He was a middle management person, earned a modest salary, worked for one company his whole life. But when he passed on at 95, 96, he was a multi-millionaire. And he created all his wealth through investing.
Oh, just by investing?
Just by investing, and that inspired me. So he was kind of like my Warren Buffett in a way. So that's why since young I got very interested in investing. So I started at about 17, investing through my mom's brokerage account because I was too young to open my own account.
Wow, at 17, okay, wow. So that's really young age to get your hands on investing. So maybe can you share with us what was your first investment and what the reason behind it? Maybe besides the
besides the shares I was given,
Yeah.
I think if I recall, the first stock I bought was in Kuantan Flour Mills. It's a Malaysian stock. And the reason I bought it was because my uncle was a controlling shareholder of the company. And he talked a lot about it. I thought, why don't I buy shares in his company? And I sold it, I think after a year or so, and made a couple of $1,000s on it. So I thought, wow, so easy to make money in the stock market, which is the wrong lesson I got because it was obviously not so simple.
Yes,
right? It's just
that's
that
right.
So looking back, I made money not because I was smart, I was just lucky. And when I then started to buy other things thinking that I was great, then I started losing a lot of money like most people. So for the first 8 years, since I started from 17 to 8 years, I would say that I went around in circles. I made all the stupid mistakes that most investors make, right? So I made money, I lose money, so whatever I made, I lost, right? So in the end, I probably hardly made in the first 8 years. So it was after that I began to really educate myself to say I have to learn how to invest the right way. And it was the last 20 plus years that I really built my fortune in the markets. After 8 years of hard lessons. I was a slow learner, took 8 years, to get it. Right? Yeah.
Okay. So then if you could turn back time to then as well, so what would you wish you have invested in?
It's not so much what I wish I invested in, it's more of, I think and I tell my students this all the time, that looking back, if I had just held on to the stocks I bought, like for example, over 20 years ago, I bought Microsoft. I bought Apple. I bought all these great companies at the time. And in my early years, I used to jump in and out. It's like the moment it goes up a bit, I'll take profit, right? Then hope I get it back lower. So I jump in and out, in and out, in and out. And yeah, I made money doing that. right? But now looking back, if I didn't jump in and out, if I just held on for the last 20 years and slowly dollar cost average, today I'll be 5 times richer.
Right.
I'll be 5 times richer, you know. So
see.
that's the main lesson. So that's why I teach my students today. When you own a great business, you know, don't jump in and out. You know, just hold on for the next 10, 15, 20 years. And that's how you build generational wealth.
Yeah, so like to see things from a long-term perspective, right?
And then people say, then when do I sell in that case? I say you sell when you need the money. Right? If you need the money to buy a house, to renovate, then you sell. But if you don't need the money, let it compound. Because if you sell it and you get the cash, then you have to buy something else.
Yes.
Right? And you have to find another company which is just as great as the one you own. And in the world out there are not many great companies. There are not many great companies. It's like once you find the man of your dreams or the woman of your dreams, it's not easy, right? But once you find a person, you want to be with the person for the rest of your life.
Yeah. Wow, okay, nice analogy.
Yeah.
Okay, so having been invested in quite some time, right? So we are curious to find out like what is your best investment today?
I wouldn't say there's one best investment because I always invest in a portfolio of companies. And over the last 20 years, I've had the discipline to only invest in very, very safe and very, very profitable businesses. So collectively, they've all done very well. But if I were to name some of the ones, would be you know, your Microsoft, your Apple, your Alphabet, your Amazon, right? The household brand, McDonald's, Domino's Pizza.
All the
Right.
like consumer brands that like everyone have heard of before.
Yes. So I tend to invest in what we call consumer monopolies. I like to invest in companies where there's little or no competition, like either monopolies or duopolies. So like I invest in Visa, MasterCard. It's a duopoly, right? Yeah. Or McDonald's and Yum Brands and Domino's Pizza. Yeah.
Can you share with us maybe 3 factors that you look out for before you make any investments?
Yeah. So before I buy a stock of a business, in fact, I've got 7 criteria that it has to meet before I buy. But I'm going to focus on just 3, right?
Yes,
Since
just
you
3.
mentioned 3, just 3, okay. So the first criteria is I only buy companies that have a history of consistently increasing sales revenue, net profit, and cash flow from operations for at least 5 to 10 years. At least 5 to 10, preferably 10 years, right? That means I want to see that the last 5 to 10 years, year after year, the revenue is growing. The profits are growing and the cash flow from operations are growing. Why? Because if you can do that, that means the company is predictable. It is resilient, all right? So for example, I love SIA as a customer, but it fails my criteria. Because if you look at the last 10 years, SIA's revenue is not going up consistently. It's like sometimes it goes up, it goes down, profits.
Even before the pandemic.
Even before the pandemic, right? Some years they make profits, some years they lose profits. And their free cash flow, if I'm not wrong, 7 out of the last 10 years was negative free cash flow.
Oh.
So it fails at first criteria. So as much as I love SIA as a customer, but I must be very objective in investing. It's not about emotions, it's about looking at numbers, you know? So what I invest in is, for example, MasterCard. I invest in Alphabet, I invest in Microsoft because, you know, they pass that first criteria. Year after year, they make more profits. Year after year, free cash flow increases. So it's recession-proof, it is resilient, it's consistent. The second thing I look for is the most important thing, which is I buy companies that have a sustainable competitive advantage that protects them from competition. So even if the competitors cut price, the competitors offer a better product, your business can retain the customers because it's got a brand monopoly. It's got a strong brand that people are loyal to, like Nike, like Apple. People still buy Apple or Nike even though they're cheaper alternatives because of the brand, right?
Yes.
So that's one source of this economic moat, right? Another source is what we call high switching cost, which means the moment a customer uses the product, it becomes very difficult to switch to another product because they're kind of like so used to the product. It's like if you're an Apple user like me, all right, my iPhone syncs to my Apple Watch, syncs to my Apple, everything syncs.
Yes.
So will I buy a Samsung phone even though it's cheaper and more beautiful? No, because it can't sync to my other products. So it locked me into the ecosystem. So I like companies where they lock in the customer. So the customer got no choice. They have to keep buying the product, right? Same thing with Microsoft. Since we are young, we are so used to using Microsoft Excel, Microsoft Word. Would you use another product? We are too lazy to relearn everything, right? So it locks us in, you know?
Yeah.
So things like that. Yeah. And the third key would be I invest in companies that have got conservative debt. So a lot of cash on the balance sheet. So they are able to buy competitors when times get bad, and they have got relatively low debt. Because if you got no debt or low debt, you can't go bankrupt. Right? So if you look at all the companies that went bust, right? Whether is it High Flux or was it Nobel Group, whatever?
Or Credit Suisse.
Credit Suisse. Yeah. What do they all have? High leverage. So if you avoid companies with high leverage, it's impossible to go bankrupt, right? Yeah.
Okay, thank you so much for sharing with us the 3 factors. So now let's move on to something else. So maybe 3 investments that are currently on your watch list, and tell us why are you watching them.
Okay, so currently I've got close to 40 stocks in my portfolio, and my priority is always adding more shares to the existing stocks than adding more. Because I don't want to have too many, then it's like having too many children, right? You can't track them all, right?
40 is a lot already.
Yeah, it's really a lot already. But if you ask me what stocks I'm watching that I would like to add more, but I already own them, would be Apple.
Apple.
I want to buy more Apple. I don't have enough. I want to buy more. But I'm not buying it because it's not cheap enough. So again, one of my rules is that I only buy when it is sufficiently undervalued, right? Another one I want to add more of is Lowe's. Lowe's is the competitor to Home Depot. They are the second largest home improvement retailer in the US, right? So I've got a small position. I want to build more, but it's not cheap enough. So I'm patiently waiting, right? What else? Another one, I guess, would be United Health, which is the largest health insurer in the US.
Why that company?
They're the largest health insurer.
Oh, just because of that?
And they pass all my criteria.
Oh, they
right?
pass all
they
the
pass all my
criteria.
criteria.
I see.
Actually, out of all the sectors, like technology, healthcare, financials, my healthcare is one of my favorite sectors to invest in. Because healthcare is both defensive, recession-proof, and has got relatively good growth potential. All right. So within healthcare, I tend to avoid pure pharmaceuticals, right? Like Pfizer and all that, because pharmaceuticals are quite unpredictable, right? If the drugs, the patent run out, they have to make more drugs. And if they fail the drug trial, the stock price can go up and down a lot. So I don't like that. I like to invest in medical devices, health insurance, because it's very predictable. People got to pay the premiums every year, right? Recession, you have to pay premium, right? Right. So that's why I like these kind of companies.
So all these companies are already in your portfolio. You're
Yeah,
just waiting
I just want to
to
add more. I just want to add more. Yeah.
Oh, nice. Okay. So how about another 2 stocks that you would buy and then hold? And why these 2?
That I don't own yet?
Yeah, maybe something that you haven't owned yet.
So one of them is Intuitive Surgical, ticker symbol ISRG. I don't own it yet. I would love to own it, but it's just too expensive. So Intuitive Surgical, they actually make robots that assist in surgery. So doctors, they perform surgery on patients, and nowadays they have these robots that assist them in the surgery with AI. So Intuitive Surgical is the leader in making all these robots.
Oh.
Yeah, and I love to own them, but too expensive. I'm waiting for it to get cheaper. Another one is IDEX, ticker symbol IDXX. So IDEX, they are the leaders in diagnostic equipment for animals. That means pets and livestock. So if you have a pet, you bring your pet to the vet, they have to find out what's wrong with your pet, right? They diagnose, do they have like cancer or things like that? And so the leader in making all this diagnostic medical equipment is IDEX. So great company, market leader, but too expensive to buy. So I'm patient. So many of these companies, I can watch them for years and years. I can watch them for 1 year, 3 years, 5 years, waiting like those lion.
On the prey.
Waiting for the deer to be weak. The deer drink the water, a bit blood, they attack the deer, right? But if the deer is strong, then the deer will outrun me, right?
Yeah. Wow, that's another nice analogy. Okay, so we've talked about a lot about stocks. So I guess stocks, yes, it's definitely a big part of your portfolio. So if you were to ask you to recommend another type of asset class other than stocks and equity, then what would it be?
Yeah, so I mean, it depends on your objective. So if your objective is to grow your wealth, then equities. Because in the long run, stocks and equities outperform commodities, real estate, bonds, and gold. All right. So for me, I focus on equities. But when I've got cash that I've not deployed yet, because remember, I only buy when things are cheap. When stocks are cheap, I buy. If they're not cheap, I don't buy. So my cash has to do something, right? So then I buy short-term bonds. I buy investment-grade bonds. But I normally buy in the secondary market. And I normally buy less than a year and a half in maturity. Because I always hold bonds to maturity. Because if you don't hold to maturity, you've got market risk. Right? If interest rates go up, the bond price go down. So I don't want the market risk, so I just hold to maturity. And I buy short maturity so that anytime I've got bonds maturing, so if the stocks are cheap, then I can start buying stocks.
Thank you so much for sharing. So maybe can you share with us more on what does money mean to you on like a more personal level?
Yeah, money basically to me is freedom. And because with money, you're free to live the life the way you want. I can wake up whatever time I want. I spend all the time with my kids, my wife. I do what I want. I don't have to answer to anyone. To me, that's money. Money is freedom, right? But once you have made to a certain amount, beyond that, another few million, it doesn't make you more free. You get what I'm saying?
Yeah.
Right? So beyond that, to me, money is just a way to keep score. It's a game. It's like me playing a computer game, and the money is just the points.
Yeah.
You know? Yeah.
With all that, then what is like your definition of financial freedom?
So financial freedom is when you have enough money such that you can choose, the keyword is you can choose to not work for the rest of your life and be able to pay all your expenses. All right. So I use the word choose because it doesn't mean that you don't work.
Yeah.
Because you realize that people who reach financial freedom, they in fact ironically work harder than a lot of other people. Like Warren Buffett works very hard, Elon Musk works very hard, Lee Hsien Loong works very hard, right? Or Lee Kuan Yew worked very hard. Why? They had all the money because you need something to do.
Yeah.
So you find that the moment you have nothing to do, how long can you sit on the beach? How long can you go shopping with your wife, right? Before you go mad, before you get so restless, right? Yeah. So it's having the choice of not working, but you still work, but you work on things you enjoy. You work on things that you're passionate about.
Yeah. So I guess you have achieved your financial freedom.
Yeah. So I enjoy what I do.
Yeah.
Right?
That's really important. Yeah. Okay. So then, what would be your advice to maybe aspiring entrepreneurs out there?
So I would say the first advice is invest in yourself. You are your greatest investment. So before you think of investing in any stock or any bond, any real estate, invest in your education. Not just a formal academic education like university, but reading a lot, learning through videos and all. Invest in yourself first. And the second thing is don't be afraid to fail. I mean, it's been such a cliche, right? But it's really, really true. It's like learning to ice skate. If you're afraid to fall, you can't ice skate. If you're afraid to fall, you can't learn to ride back. You have to not be afraid to fall. All right. And the good thing is when you start young and you start early and you fall, you make mistakes, the mistakes are small. And it's better to make all the mistakes when you're small, when you have little money, to make all the mistakes when you have little money when you're younger, than making mistakes when you have more. Yeah.
I think that's really good advice. So I think that brings us to the end of the video. But before we leave, so last question before we wrap up today's video. So can you share with us your investment motto to our audience and maybe explain a bit why is that?
Okay, so again, my investment motto was what I mentioned earlier, which is I'd rather not make money if there's a chance of losing money. So it's all about capital preservation. And again, it's not something new. It's something that I've learned by reading about Warren Buffett since I was young. That the first rule is capital preservation. Whether you are a long-term investor or short-term trader, it's the same concept. So I do a lot of short-term trading as well. But most of my investments are long-term. But I do short-term trading. But even in short-term trading, the most I will risk is 1% of my capital on any one trade. Because you never know which trade will win or lose. There's no such thing as a sure win trade. I don't care how good a trader you are, you will have losing trades, right? And you will still make a lot of money as long as your winning trade, the profit cover the losing trade. Okay, so the important thing is when you have a losing trade to cut loss fast, to keep the losses small in trading. All right, and in investing, it's about being able to diversify into great companies so that even a great company short term there's volatility, it's okay because it's a small percentage of your portfolio.
Thank you so much for sharing that with us. So I think that brings us to the end of the video. So thank you, Adam, for joining us today, and thank you all for watching. And be sure to catch us again and for more videos. Bye.